Hello, I am Bob. This is my channel about success, money and investment. Today I will introduce you 8 reasons that will convince you to own gold as an investment. Gold is respected throughout the world for its value and rich history. Coins containing gold appeared around 650 BC. And the first pure gold coins were struck during the reign of King Croesus of Lydia about 100 years later. It is the metal we fall back on when other forms of currency don't work, which means it always has some value as insurance against tough times. In today's video I'm going to show you 8 reasons to own gold. But before we move on, don't forget to check out my channel for similar content and hit the like and subscribe button to support the channel. A history of holding its value. Unlike paper currency, coins or other assets, gold has maintained its value throughout the ages. Since ancient times, people have valued the unique properties of the precious metal. Moreover, gold has a unique and beautiful color, unlike other elements. The atoms in gold are heavier and the electrons move faster, creating absorption of some light. Increasing demand. In previous years, increased wealth of emerging market economies boosted demand for gold. In many of these countries, gold is intertwined into the culture. In China, where gold bars are a traditional form of saving, the demand for gold has been steadfast. India is the second largest gold-consuming nation in the world. It has many uses there, including jewelry. As such, the Indian wedding season in October is traditionally the time of the year that sees the highest global demand for gold. Supply constraints. Production of new gold from mines had been declining since 2000. According to bullionvault.com, annual gold mining output fell from 2,573 metric tons in 2000 to 2,444 metric tons in 2007. It can take from 5 to 10 years to bring a new mine into production. As a general rule, reduction in the supply of gold increases gold prices. Geopolitical uncertainty. Gold retains its value not only in times of financial uncertainty, but in times of geopolitical uncertainty. It is often called the crisis commodity, because people flee to its relative safety when world tensions rise. During such times, it often outperforms other investments. For example, gold prices experienced some major price movements this year in response to the crisis occurring in the European Union. Its price often rises the most when confidence in governments is low. Weakness of the US dollar. Although the US dollar is one of the world's most important reserve currencies, when the value of the dollar falls against other currencies as it did between 1998 and 2008, this often prompts people to flock to the security of gold, which raises gold prices. The price of gold nearly tripled between 1998 and 2008, reaching the $1,000 an ounce milestone in early 2008 and nearly doubling between 2008 and 2012, hitting above the $2,000 mark. Inflation hedge. Over the past 50 years investors have seen gold prices soar and the stock market plunge during high inflation years. This is because when fiat currency loses its purchasing power to inflation. Deflation protection. Deflation is defined as a period in which prices decrease, when business activity slows and the economy is burdened by excessive debt, which has not been seen globally since the Great Depression of the 1930s. Portfolio diversification. Gold has historically had a negative correlation to stocks and other financial instruments. Properly diversified investors combine gold with stocks and bonds in a portfolio to reduce the overall volatility and risk. If you like the video about advantages of owning gold, like and subscribe to my channel to be the first to get the updates about life planning, finances, investing, and being successful.